Hello everyone, today is Monday, May 25th, 2020, the Memorial Day. The market is closed today because holiday, but the S&P 500 E-mini is open. So you can see that the S&P 500 E-mini today actually made a new high. So it's open. So because of volume, the market is low, so the market makers are very eager to push the market even higher. The hedge funds are eager to push the market even higher because the volume is low, right? The general market is not trading right now, so they can use a very small amount of money to push the market even higher by using the futures products. So by the time tomorrow the SPY opens, we're gonna be seeing this thing to gap up to the almost 290 something level, right? So right now we are looking at we are very closing in on the 3,000 level. We are at 2,987. So by the time the market opens tomorrow, the S&P, so SPY, the SPY is going to gap up to 298.7, roughly that amount. And you can see that here, I am looking at this because the general market is not trading, and it seems that the market maker just tells me the market maker and hedge fund are very eager to push the market even higher. This is for a not so obvious reason, which I'm going to talk about in a minute. So let's take a look at the chart first. So you can see that I've been saying for several weeks now. At this point, this drawing has been on this chart for a long time. And you can see that at this point, we are actually taking this particular path. We are continue to go higher from this point on without having a dip, which I do hope for, which I was hoping for, so I can re-enter my position. Unfortunately, I sold here, and I was able to avoid this, but I did not re-enter. So the market is now even higher. What else can I do, right? Good thing that you did not short the market, unlike a lot of YouTubers, a lot of people on YouTube. If you look for all these guys, they've been saying the market's gonna crash every single day, every single week, and if you follow their advice, your short positions, you're holding a lot of you're back holder, right? So if you short it here, if you short it here, if you short it here, you're just back holding your short positions. And if you're shorting with options, it's even worse. If you're shorting, if you are enter a put option position here, by the time the market gets to this point today, you will be losing more than half of your money. That's how brutal that is. And if you're some novice traders who are unaware of using the future options, if you're using because a lot of brokers doesn't allow you to use future options, right? Most brokers for the retail customers do not have access to E-mini 500 futures and its future options, which I do have access because I'm using a professional brokerage. So if you're with Robinhood, with TD, Ameritrade, all these Vanguard, all these brokerage firms, you're unable to take advantage of the 23/6. This market trades 23 hours and six days a week. This advantage. So tomorrow, like if you're holding a short, if you have a stop loss, the market's just gonna gap up and hit your stop loss, and you're gonna be basically stopped out at the highest point, possible. So, which is really bad idea to have any option positions on a illiquid and has a risk of a gapping market product. So the gap risk is something you absolutely have to manage with all these S&P SPY retail-oriented ETFs, which I absolutely avoid. I don't use any of these stuff. I don't use any of these ETFs because they have gap risk, right? They just gap up and gap down every day, and you can't protect your position. You can't protect your investments. So So this is what's going to happen. This is what's happening right now. The market is going to continue to go up, and hopefully it's going to, very likely it's going to reach the 3100 price target level. And we're going to see what the market reaction going to be once we reach the 3100 level, which is a very important level that we're watching. So the general market is really good. In my other video, I talk about the Fed. Basically, the Fed has been dedicated, basically committed to the market that they are doing QE unlimited. They're buying junk bonds. They're buying corporate bonds. For example, the Fed actually right now, has become a proud owner of a bankrupt company. I mean, near bankrupt company, Hertz Global. So because Hertz bond, the corporate bond, was issued last October. What's interesting that they issued the bond last October, so you can see that Hertz October bond. So what's interesting that they priced in last October they issued a bond, which is $500 million. I think I read it somewhere else. It was $500 million. That was going to mature on 2022, and they have a coupon rate of only 6%, and they are going to pay. The coupon on the bond is like a fixed income product. They're paying interest on a biannual basis. I think what happened is that today, yesterday, actually on Friday. Last week, Hertz basically announced that they are applying for, they're going through bankruptcy process. That's why the Hertz was dropped more than 50% after hour, right? And what happened is these bond, what's funny is that if you have bought this $500 million USD bond from Hertz in last October, you wouldn't even get the first interest payout. Imagine that you are one of the sucker who bought into this bond in last October 2015. This bond is you're gonna lose everything, all the money that you're gonna invest in this bond. So I think the bondholders are probably gonna be getting in the end 20 cents on a dollar or something, which is gonna be you're basically losing 80% of your money on this thing, and plus you're not even getting they couldn't even pay the first interest payment for this particular bond they issued last October, which is really, really ridiculous if you think about it. You're really a sucker who bought into this bond. Imagine your institution who bought like $100 million of this. You're screwed. What I mean is that this bond is actually being owned by one of the junk bond ETF, which I forgot the name. I think junk bond ETF. So this ETF actually holds a. It could be this one, XHY. I don't know which one is it. HYG. It could be HYG. It could be this one, the high yield corporate bond ETF. So this ETF actually holds some of the Hertz international bond that was issued last October. So this ETF actually holds a little bit of this. And what's interesting that the Federal Reserve is actually buying, because Federal Reserve is buying bond ETFs. So Federal Reserve actually technically owns part of Hertz corporate bond, which is near worthless. That's kind of interesting, right? The Federal Reserve basically printing money into propping up the bond market, and part of that money actually goes into junk bond, and it goes into garbage like this. Well, that's what I found interesting. But again, Federal Reserve is absolutely 100% committed in maintaining the liquidity of the market. They have announced QE infinity, so QE infinity, and they are not going to they are not going to stop, okay, until this virus thing is over, until the economy is back to normal again. So they are perfectly committed. A lot of people have been asking me, okay, Fed is going to run out of money one day. Let me tell you that Fed is not going to run out of money, because they can print infinite amount of money. Okay, they can take, if they want, they can buy every single share on the market. They can buy every single stock, bond, fixed income products, equity, and everything, all the financial products on the market, because they are the legal issue, the issuer of the legal tender, the U.S. dollar. So they can print as much of money as they want, and they are not going even to run out of paper, because all the money right now, 90% of the money is actually in computer, right? So they just add a zero to their computer entry, right? Just like this, I just keep adding zero to my computer entry. That's how Fed prints money. So they don't even have the restriction of running out trees, because they can just add a zero to their balance sheet. It's very easy for them. The reason they wouldn't want to do that, to do the print out money and buy everything, is because, first of all, the Congress doesn't allow the Fed to directly buy stocks. But let me tell you that that's not the case for a lot of central banks in the world. This is self-enforced rule for the Federal Reserve, which is the Fed cannot buy any equities, cannot buy stocks directly. They cannot buy Amazon. But other nations like Japan, the Bank of Japan has been able to buy the Japanese stock market. So Bank of Japan actually buys ETF for the last 8 years. So Bank of Japan has initialized ETF buying since 2012, and it has become the largest ETF holder on the Japanese stock market. So let me just show you Bank of Japan ETF holding. You can see that. Yeah, so I mean, recently it lost money because the market went down, but you can see that Bank of Japan is the largest ETF buyer on the Japanese stock market. And what's interesting, that the Bank of the Swiss Central Bank, they don't just buy stock, they buy US stock. They don't buy the stock of their own nation, they buy US stock. So if you own companies like Amazon, Facebook, what's interesting, that congratulations, you are the friends of Swiss National Bank, because Swiss National Bank actually owns some companies like, right here, like Apple, Microsoft, Amazon, Facebook. So Swiss central banks actually owns equities in all these companies in the U.S. market. So that's no wonder all these companies are going all-time high, even in a coronavirus scenario like this, even in a 20% unemployment situation like this, because you have central banks buying these companies. Okay, so do not fight the central banks. These central banks can print money. If you and I can print money in the stock market, can print money, imagine that. Imagine how powerful we can become. We can buy anything, right? We can buy as much stock as we want. We can buy as many cars and all that stuff we want, houses we want. So do not fight against someone who has absolute advantage over you, who can actually print money. Don't do that. Okay, so let's take a look at the crypto market today. So I've been talking about this too much. So let's talk about the crypto. I want to look at the Bitcoin chart, because I'm pretty bullish on Ethereum. But Bitcoin is actually something that is still the dominant cryptocurrency. Like right now, right? It's the leading asset in the cryptocurrency arena. And what's important about Bitcoin is that I think that the reason I'm more inclined to hold Ethereum is because Ethereum, in my opinion, is more valuable than Bitcoin in the long term. And the developer base of Ethereum is constantly growing, and Ethereum going to have a major update, Ethereum 2.0, in July this year. So that's happening very soon. So I think the flippening, if you know what flippening is. So the flippening is basically a prediction say that the Ethereum one day can become a larger cryptocurrency than Bitcoin. You can see that this website used to be very popular back in 2017 and 2018. Even now, right now, this website is actually down. That just shows you how people actually lost hope in flipping, in whether the flipping is going to happen or not, which is a very good sign uh, because when the market lose hope, it means the Ethereum is down dramatically. It's not being paid a lot of attention. That's the time you want to accumulate in the cryptocurrency market. Okay, so let's take a look at the Bitcoin chart. This chart it's interesting what's happening here. Okay, I want to point out here, we had a very huge wash and rinse. We had a downtrend, and we had a very huge wash and rinse right here, with a lot of volume. And basically around this point, all the Bitcoins has fallen into the stronger holders, the whales, basically. The people who have not sold is not gonna sell, but after this, because this is really a test of your ability to hold. And for all these short-term players who has been playing, Bitcoin futures, all that stuff, with even 2 times, 3 times, 10 times, 100 times leverage, they're wiped out right here. These guys are bankrupt. So the players have left in this arena in Bitcoin or any cryptocurrency right now are the strongholders like you and I, if you're watching this video. So I'm holding, I actually had quite a bit of a Ethereum position right here, and I was able to hold through this. Despite it went down by 50% in one day. Doesn't matter because I don't have any leverage. So whatever they do in the market is not going to shake me out. This is how important to really make a lot of money in the cryptocurrency market, is that you shouldn't have any leverage, because the cryptocurrency market, the Bitcoin, Ethereum, I don't know about Bitcoin that's gonna go to 10 times from this point, but cryptocurrency like Ethereum is going to go 10 times, 20 times in the future. That's the certainty is really, really high, and the chance of you losing money in the long term is almost zero. If you look at the Fed balance sheet, I talked about in my previous video, how much money they have printed out, $6 trillion extra in 1 year. So we're gonna have asset class inflation sooner or later, right? And a lot of that money is going to go into the cryptocurrency market, and it's going to go into the top 1 and 2 cryptocurrency. So Bitcoin, and this looks to me, now we had a shakeout here, and here according to our analytics, I'm not going to tell you which analytics we actually look at. We are looking at the retail holdings of Bitcoin and how bearish and how bullish the average retail holders of Bitcoin are. And what happened is, even at this point, most retails are not very bullish. They're not using a lot of leverage. Right now, the leverage of the Bitcoin market is actually very low at this point. It's very different from this point. This point, the leverage is really, really high. A lot of people have piled into future products. They have bought a lot of future products or leverage the spot positions with 10 times leverage, five times leverage, minimum 100 times leverage. At this particular point, the leverage is actually not that high, and I think that the Bitcoin actually has a chance in a very short period of time, probably by August or even July, that we're gonna have a spike up that's gonna hit the all-time high here. It's actually very likely that we're going to have this move. And this looks to me just a temporary consolidation. So if the Bitcoin is hitting somewhere at all-time high within this year, that this move is going to come in, Ethereum is going to perform just as well, right? So that's what I've been, and if for Ethereum coupled with Ethereum 2.0, it could do really, really well. Might even outperform the Bitcoin. So if you look at right now, the Ethereum actually underperforms Bitcoin. Unfortunately, is the product I chose. But I think the outperformance might happen later this year. So hold on to your crypto positions. Do not sell them, and enjoy the rest of your night. Happy trading. Bye bye.